Welcome to Get Real with Eddie, where we delve deep into the world of real estate with your host, the designated managing broker of Exit Real Estate Specialist, Eddie Ruettiger.
I have to say, I am doing so much better than yesterday.
What happened?
It was too cold!
It still is!
It's better. Not much, but it's better. I will take every degree I can get.
I will claw every degree.
So I had an old roommate that used to make a joke, and I've already taught this joke to my son. And it is just, it's hysterical. I even had it, I think, last week.
Yeah.
It was 9 degrees out, or 4 degrees. I forget what it was. And I don't know if you saw it, but Eddie goes, 4 is an age, not a temperature. My roommate used to say that all the time. And it's so true.
Cute.
Is an age, not a temperature.
Yeah. Well, I feel for us, but I'm also feeling for my brother in Houston, who called me in a panic a couple of days ago because they were expecting snow, and he's got a pool, and we're used to, winterizing our pools, and they were expecting 6 inches of snow, and what does he do about his pool? So
you can't winterize it. I mean, do they winterize a pool
not usually
in Texas?
Not usually. Well, not in Houston. I mean, they're right there, they're south, so not usually. But they do get cold snaps.
Yeah.
But it's for a day.
For
or
a day.
2, or maybe an inch of snow. But 6 inches of snow, he's worried about getting clogged up on top of the pool and causing problems. And I'm like, ooh.
I would have just took the cover off and probably drained.
He doesn't have a cover.
He doesn't have a cover?
No.
And then I would just drain it. Take the drain down.
Well, but then you have to winterize the pipes or make sure the pipes, you know what I mean? Normally what they do during those cold snaps is just keep the pumps running 24/7. Keep your pump running because you've got 65-degree water.
And
it's going to take a long time for it.
But 6 inches of snow is going to cool that water off a lot faster.
And it's going to accumulate, if it's an inch or 2 an hour, it's going to accumulate on top of the pool and cause slush and a blockage into the skimmer, which will
cause a
problem with your pump.
See, I never had a pool, so I don't know these issues or problems.
Yeah. So we had a little powwow about that, he and John and I, about it. So, but they got problems down there. It's cold, and they're not equipped for it. So
we got to touch bases because on a previous show we were talking compensation, and got a couple flags. A couple people thought I was implying something, and I went back and listened. I did not. I still don't think I was meaning, but overall.
Yes, just to clarify.
The process for commission has changed to what it used to be, and it is different now. And with that being said, it has always been negotiable, and that was one of the things you're making it sound like it's not negotiable. No, it always was negotiable. It's how it was negotiated out is what the change is.
Yes.
All right? So, just wanted to clarify that right out of the gate, get that out there, and address that.
We just want it to be clear.
Just want to be clear.
Just want to be clear.
And I gotta be honest, I like the newer way we do things more than previous. I know some people don't, but I honestly do. I think it's a lot simpler. It's a lot easier.
I think it's a lot more straightforward.
Yep.
Yes. And when taking multiple offers, it's actually easier for the seller to compare.
It is. I also think it gives the opportunity for the buyer to take on some of that commission responsibility easier than before and make their offer a lot more aggressive.
Yes. It's easier. It's not that it's different, it's easier.
I think it's easier.
Yeah.
That's my view and my opinion.
Like you said, it was always negotiable. It's just how we did it that changed. Yes.
Speaking of trying to be perfect, when's the perfect time to move?
When you're ready.
That's what I would say. It says there is no perfect market to move. No matter when you're looking to buy, there's always some benefits or some downsides, depending on what is going on in the market.
Oh, yeah, in the market. So it's when you're ready. When you're ready. Anyway.
If you weren't sure and you bought into things thinking back 5 years ago, just look at how great you'd be doing right now.
Yeah, and people were hesitating 5 years ago.
Yeah.
So
Yeah.
there were reasons people were hesitating then.
Bankrate says, the complexities of current conditions mean that now more than ever, it's smart to lean on guidance of an experienced local real estate agent if you want to enter the housing market in 2025. Whether as a buyer or seller, let a pro lead the way for you. I can't argue with that. Make those calls, interview those people, sit down and talk to them, get their views, get their philosophy, get how they like to approach things, because everyone's different.
Mm-hmm.
Even you and I, we've worked together for some years now, and we still have different ways of approaching stuff.
Oh, yeah. Well, we're just different people. We think differently.
Yes.
Yeah.
Absolutely. So...
It's not a right or wrong.
No, it's not. It's just the strategies, and my strategies have changed over the years on how I approach things.
Yeah.
So
Me too.
with the market. So as Yahoo Finance says, buying a house at a time when both mortgage rates and home prices are favorable is a challenge. You probably shouldn't try to time the housing market, but when it comes to making a sense for your personally. But when it makes sense for you personally. Don't try to time the market. Just do it when it makes sense.
Yeah.
And that's really what it's about, is what makes sense for you is the best time to buy.
Yes. When you're ready.
If you're looking at, here's my argument.
Okay.
If you're looking at renting for 3 years or more, you should be buying. That's the best time to buy.
Mm-hmm.
If you can buy and not rent. Now, if it's less than 3 years, then there's some strategies and things you got to sit down, we got to talk. But if it's more than 3 years, you should be buying. Because you're leaving equity in the owner's pocket. You're going to be paying a mortgage either way. Do you want to pay your mortgage? Or do you want to pay somebody else's mortgage?
Yeah.
Now, on a short-term basis, paying someone else's mortgage could be more financially beneficial for you, because when you factor in the cost of buying and the cost of selling, then it makes sense.
Sure.
But once you hit that 3-year mark, usually there's equity there. Maybe 2. Could be 1, honestly.
Yeah, depending. It depends. But yeah, I think there are reasons to rent. There are all kinds of reasons to rent. Maybe you're just getting out of mom and dad's house. Maybe you're just coming into town and you're not sure where you want to buy. Maybe you know, all kinds of reasons. So renting it can be a good thing.
Maybe you like living with mom and dad. There's nothing wrong with that.
No, not everybody is geared to be a homeowner.
Well, it's not just being a homeowner. They want to be a homeowner, but they still enjoy, maybe they're very, very family-oriented people. And we're seeing that. More and more people are buying multi-generational housing in today's market. 17% of home buyers are choosing multi-generational housing. That's when you buy a house with your parents, adult children, or even a distant relative. That makes that noteworthy. Is 17% is actually the highest level ever recorded by the National Association of Realtors. So they got a little chart here going back. In 2021, it was 11%, shot up to 14 in 2022, 2023, and now in 2024, it's 17% of the market.
Yeah, there's a lot of benefit to living with family.
Well, and we were talking on the phone last week about these barn-dominiums that everybody's talking about.
Oh, yeah. Big deal.
That's the big, hot buzzword in real estate, is barn-dominium.
Yeah.
And I saw one influencer talking about how their setup is. They have like a 6-car garage in the middle, okay? Mm-hmm. And it's almost like having pods off the garage.
Okay.
All right. So one pod was one set of their unit. The other pod was one set of grandparents. The other pod was another set of grandparents. And then the fourth pod, they actually had monkeys that they kept in, that was like designed for their monkey cages and stuff.
Oh, wow. Okay.
And but again, everybody has their own unit, everybody has their own thing, but it creates this
It's like a family compound
concept, and you're seeing a lot of people looking for that aspect.
Yeah. Well, it makes sense when you're trying to raise a family, or you're trying to help mom and dad in their elder years, or you need financial assistance and you pool your money together. There's a lot of reasons to do that. It's all great.
Yeah.
It's all great.
I mean, so you're seeing this multi-generational housing. You're seeing builders that are offering, maybe not a 4-unit, because obviously the monkey cage could have been another.
Sure, could have been a brother, cousin.
Yeah, another pod.
Uncle, whoever, yeah.
But the builders I'm seeing doing 2 units, almost like a duplex.
Yeah.
But it's not laid out side by side as a duplex. It looks like a single family home with a 2-car garage on one side and usually a 1-car garage on the other that kind of horseshoes around the front yard. So there's kind of a curve. So all right. And then you have a common door between the 2 units that can lock. So, and then usually you got a 1-bedroom on one side and the other one's a 3-bedroom. So some areas in some municipalities are allowing these to be built. Some are not, because they're worried, well, they're going to get rented out. They're going to get rented out. And they are against it. I don't understand why.
I don't either.
But
with the amount of shortages we have, we definitely need to think about that.
We need more rental property. We need more housing stock, period. All right? People don't just jump into buying a house. They almost always will rent first.
Yeah.
I mean, so the homeowner percentage has sat between 62 to 64% for years. So that means you still have 37% of people renting.
Yeah, which is normal.
Yes.
It's about 30 to 35%. I've had a meeting today, and we were discussing rentals in Will County. 13%.
That's low, I think.
That's it. That's extremely low.
Very, very low.
Extremely low.
Because
13%. It's all we have for rental.
Wow.
Yeah.
Rick Sharga, founder and CEO of CJ Patrick Company, explains there are a few ways to improve affordability, at least marginally. Purchase a property with a family member. There are a growing number of multi-generational households across the country today, and affordability is one of the reasons for this. I wonder how that's addressed on property tax, or on your taxes.
What do you mean?
Well, you get to write off your property tax. Who writes off the property taxes? Who writes off the property? You know what I'm saying?
Yeah.
I guess they all could if they're all on the deed, but I don't think they get to write off the full share. They'd have to probably split it. This is when we need a CPA.
Yeah, how would that be done? How do they do that, or do they take turns? Like if you have 2 sisters.
One year, one the other year, one.
Yeah.
That makes sense.
How do you do that?
Yeah. So, might be on a percentage basis of the square footage that you're using, too.
True.
So, let's say the total square footage is 4,000 feet and everybody's got 1,000 feet.
Yeah, you get 4 people in there, then everybody's
25%. Yeah. So.
Good question. I have to look into that.
Yeah, so if you're looking multi-generational housing, that is a question I would be asking and talking to a CPA on, is your tax write-offs with property taxes and things like that. So, one thing you don't want to ignore either, and you don't want to skip, is getting that pre-approval. One essential step in the home buying process you may not know a lot about is a pre-approval. So what is a pre-approval, Nancy?
A pre-approval is basically a green light from the lender to let you know how much they're willing to borrow. Let you borrow for a home.
So Realtor.com states that here are some of the documents you're going to need to get that pre-approval. W-2s from the last 2 years of your taxes, tax returns for the last 2 years, pay stubs for the last 30 days, bank statements from the last 60 days, investment account statements, and 2 years of history of where you've lived.
Yes. And that's for anyone who's applying for the mortgage.
Yeah.
Who's going to be on the mortgage. Let's say you've got 2 sisters and one is going to be the one on the mortgage.
Mm-hmm.
The second sister does not have to
Provide any of
that.
Correct.
Just the person on the mortgage.
Correct. So, how it helps you determine the borrow is that they can look at what you can afford monthly and see where that monthly payment can come in, and then they calculate what your monthly payment can be in, and they back that number out and end up giving you, with principal, interest, and local taxes, HOA fees, stuff like that, they can give you what they feel you can afford in a purchase price. So that's kind of how it works. They back it out.
Yeah, like they say, how much are you comfortable with paying?
Yes.
And you go from there.
Yes. So
on a monthly basis, not total.
And it makes a big difference because it helps you stand out, gives you the advantage. Greg McBride, Chief Financial Analyst at Bankrate, says pre-approval carries more weight because it means lenders have actually done more than a curious review of your credit and finances, but you have instant review your pay stubs, tax returns, bank statements. A pre-approval means you've cleared the hurdles necessary to be approved for a mortgage up to a certain dollar amount.
And they even have products where you're underwritten. All you got to do is find the house.
Yep.
I mean, it's that
That's beyond a
extra
pre-approval.
step.
You're actually underwritten. That's a huge step. You get that in, now you're coming in with some real weight. That's almost as good as a cash offer.
Yeah.
Honestly. It is literally almost, and there's some banks that will back that up. Like if we back it up with cash is what their kind of their sayings are. Mm-hmm. And they look at it from an aspect of if something goes wrong in the loan, we're going to cash it and then we'll refinance it. We pay cash and then we refinance it after we close. The seller has no risk.
Yeah,
so,
which is really awesome.
Some amazing products out there.
Yeah.
It really can give you an edge up because we're looking at some pretty competitive markets, I think, going in the next couple of months.
Oh, yeah.
I think there's a good chance that the markets are going to be very, very competitive.
Yeah. I see spring being very highly competitive. Spring market.
Well, I mean, a lot of it is going to come down to what goes on with the rates. And I saw rates again yesterday. And I didn't see rates. I saw the 10-year Treasury rate.
Yeah.
The 10-year Treasury rate went down to 4.57-ish.
Okay.
During the day. I don't know. It was around about 130, 145 I saw it, I want to say.
All right.
So, but I haven't seen anything on rates. I saw the 10-year drop on Friday to 4.5, so it's been hovering that 4.5, but it was up 4.7, 4.8. Now, at the same time on Friday when it was at 4.5, I didn't see where rates went, but if we kept that squeeze, we talked about that
in
a previous show. where we finally got rid of that gap of 3.5%, and the gap was like 1.8 to 2%. You know,
Which is
more
where it belongs.
the historical average. Then it would be, you know, really, really good. I wonder if I got an email from my buddy at Fairway yesterday.
Oh, you know what? I didn't see it come through, and I get the same email. To find out.
I did not get one yesterday.
Yeah, what's going on with rates right now?
Yep.
Are they following suit and dropping? Because they were on their way up a little bit. Yeah, I did not.
So I'm just wondering where things are going to go, and if those rates do keep ticking downward, which it does look like the trend is going to be, then I think you're going to have a really competitive spring market.
Yeah. If we can, like I said, if we can get those rates, I'd love to see them under 6, but I don't see them this year going under 6. But in the lower 6s, oh man, it's going to free up a lot of people to be able to move around.
I think it's going to really free up a lot of people. I think we start seeing stuff we get down to 6.25, we're going to see movement. Mm-hmm. I don't think 6.5 is going to be enough. I think it's going to take us to get to 6.25, and you're going to really see some movement in the marketplace.
Yes.
So,
and anything under 6 is going to get things really stirred up.
So, what do you have to save for? That's the big question. Is what do you save? What are you saving for when it comes to the market? You know what? Yeah, let's go ahead and talk about that. So, number 1, down payment.
Yep, you need a down.
So, down payments can vary depending on the mortgage, from a 0 down with a VA or a USDA or a private,
right,
to as low as 3.5% down FHA.
Mm-hmm. You do not need 20% down.
You don't, but there are advantages to a 20% down.
Yes.
You have no insurance when it comes to a 20% down loan. So mortgage reports explains the amount you need to put down will depend on a variety of factors, including loan type, your financial goals. If you have a large down payment saved up, don't worry, there are plenty of options. If you don't have a large down payment saved up, don't worry, there are plenty of options available. So down payment options are there available for you to move on. So you don't need 20% down, but at the same token, if you do have 20% down, hey, great.
Yeah, your mortgage, you don't have to pay the mortgage insurance.
Yeah. And it might not, honestly, 20% down might not be the best deal. You might be better off taking an FHA loan and buying a rate down. You may save more money. It just all depends on your circumstances.
Right.
Talk to the lender.
I was just going to say, talk to your lender, and you guys can run the numbers and figure out exactly what's better for you. It might be 10% down, and like you said, buy the rate down.
All right, so there's more things that you need to save for when buying a home, and we're going to talk about those when we get back after the break. Keep it here with Get Real with Eddie.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
and Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
Stocks may succeed, stocks may fail. Real estate is always there. It's Get Real with Eddie.
All right, welcome back to Get Real with Eddie. All right, closing costs are the next aspect that you need to save for when you're buying a house. So, mortgage closing costs are a few fees associated with buying a property you must pay on closing day. Closing costs typically range from 2 to 5% of the total loan amount, and they include fees from the appraisal, title insurance, and origination and underwriting of the loan explains bank rate. So that's what a closing costs are per bank rate. I usually see about $5 to $8,000, sometimes 10, depends on what your purchase price is. But you got to remember, in our market, in Will County, in the Chicagoland region, we have some pretty high property taxes.
Yeah, we do.
And our property taxes are paid a year behind their due.
Yes.
So you use the property for 2025. You will pay that 2025 tax bill in 2026.
Yes.
Now, if you're making a monthly mortgage and your mortgage escrows your taxes, yes, you're paying property taxes every month in your
You're banking
payment.
You're banking property taxes every month in your escrow account.
In your escrow account, but those taxes are still only paid, the next year.
Right.
So, if you sell your house, let's say December of 2025, but those taxes aren't due till June in Will County, the first installment, then what happens? Well, you give the money to the new owner, and the new owner's the one responsible to pay the taxes, not you.
Right.
Because they own the property.
Right. And you live there, so you should pay the taxes for the time you live there. So that's why you give it to the new owner.
And this is something else that's negotiated out during the deal. All right? There is a paragraph that talks about tax proration, and you can give 100%. Some ask for 105, which seems to be a very common number in our marketplace because our taxes go up anywhere from 2 to 3% on average. Sometimes they're a little higher. We've seen taxes go up 4 or 5%. You get into Cook County, you'll see 110% asked a lot because their taxes seem to sometimes go up a lot more. So, with that being said, you don't necessarily have to do that too. You could offer them 90% of the tax bill.
Yeah.
It's all negotiated.
It's all negotiated. And do you have exemptions? Is it a homeowner's exemption or not? Is it a senior exemption or not? Is it a freeze or not? A veteran or not? And there's all kinds of exemptions that you work out, and that is part of the negotiating process.
And the reason I bring this up is that the amount is then credited to the buyer. So that brings some of the buyer's total amount that they need at the closing table down a little bit. Now, granted, they have to set up the escrow for the new escrow account, but it just offsets, and it's not 100% wash.
Yeah.
So it really does give you a slight edge in some ways as a buyer when it comes to the money you're getting in versus the money you have to put out at closing, because they're going to set your prorations up differently. Every bank does it different. That's really what it is. So, and for those that are wondering, well, what about all that money I paid to my bank to escrow my taxes? They send you a check after closing. After your account's closed, you get a check with that closing. Mm-hmm. That's why you usually give the attorney a forwarding address, so that way they can turn around and sketch you that check. So, another thing you're saving up for, earnest money deposit. Now, typically we see 1 to 2% in earnest money. You can put down more and make your offer look stronger.
Yes.
There is nothing saying you can't. And that goes down to your closing costs and your down payment.
Right. It's not in addition to, it is
money up front.
Upfront money.
Yes.
Not additional.
Realtor.com describes, it tells the real estate seller you're in earnest as a buyer. Assuming that all goes well and the buyer's good faith offer is accepted by the seller, the earnest money funds go toward the down payment and closing costs. In effect, earnest money is just paying more of the down payment and closing costs up front.
Yeah, it's prepay. It's prepay.
So that is kind of the big features of that. All right, we didn't do numbers. Where do you want to do numbers?
Just a quick thing you also save money for that you're going to need when you're purchasing a home is money towards your inspections and towards surveys and those items. You'll need a little bit of money for those as well.
I would also say that you need to save some money up for the actual moving expenses too.
Yeah.
I mean, and perhaps maybe you're going to pay the compensation of your agent, so you might want to save money for that also. I mean, there's a couple different aspects for it. I want to do Bolingbrook really quick.
Yeah, love to.
We haven't. I don't think we
haven't talked about Bolingbrook in a while.
Yes. Yeah. All right. So Bolingbrook is up. These are December median sales price numbers. They are up 13.4% on the total. We're going to do resale only. See how that changes. All right. Resale is up 11% to $355,100 on the median sales price. The original list price is $365,000, up 12.3%. Market time on the median is 10 days, up 11.1%, because last year it was 9 days. Percent of last list price received, from the last list price to close, they're getting 100%. From original list price, they're getting on the median 100%. So the average on the original list price is down 0.9%, because it was 100.9 last year, and the average on the percent of last list is down 0.6, because the averages is 100.8. It was 101.4. So they are very, very competitive offers going on in Bolingbrook. So contract to close is 38 days, no change on the average. 34 days on the median, no change at all. Listing to contract is 17 days on the average, down 15%. On the medium, it's 7 days, up 16.7. Month supply is up 1.2% to 33.3%, because it was 0.9 last year. Homes for sale, at the end of the month, there were 69 units for sale, up 23.2%. New listings, and that's what I was looking for, new listings were up 15.1%. 943 new listings in Bolingbrook. Under contract is up only 1.5%. 689 units went under contract. Closed is up 2.4%. 695 units closed. So it seems the properties are coming onto the market for show, but are we getting the traffic? And that's what it might be down, and that's what it looks like. Showings to contract are down 18.2% on the median. They're down 21.9% on the average. Showings per listing are down 25.3%. So are we starting to see in Bolingbrook supply catching up or starting to outpace demand? I don't think it's outpacing it yet, but we're seeing a shift in the supply and demand, I think.
I think
Now, it could be a fluke month.
We'd have to look back and look at what Bolingbrook's done as far as historically month to month.
Showings per listing actually seems to be pretty consistent when you're going back on the 3-year timeline. They're down, and they've been down
for a while.
Since June.
Yeah.
So, and when you look at new listings, the new listings have started back up. But I think this could be a frustration because you had the holidays, you had the election. Now and then we had snow in December, and we had some funky weather days. You put that all together.
Now we just have cold.
And then you add in the interest rates are up for December.
Yeah, interest rates popped up.
Big.
So
I do think you had some buyers that are sitting back and waiting for these numbers, the rates to come down.
I
think they're still there, but they're not running out to go look at every house. It has to be an amazing house for me to go look.
Yes, they're pickier. Definitely.
Price fixes everything. If you're on the market, adjust your price.
Mm-hmm.
But if you're not getting the showings or you're not getting the traffic, price fixes everything.
Yeah, they're telling you. Because people want homes. So if they're not buying, it's 9 times out of 10, that's the problem. And like you said, price fixes everything.
Price fixes everything. I mean, so honestly, you need to look at your price if you're on the market and you're not getting the traction you want. All right, we're going to take a break. When we get back after the break, we're going to talk about some of the experts throwing out more forecasts, as always, because it's that time of year.
Yes,
Keep it here with Get Real with Eddie.
It's Eddie Ruettiger from Exit Real Estate Specialists.
And Get Real with Eddie. I want to bring to your attention the Herbert Trackman Planetarium at Joliet Junior College. My son loves this. They offer free shows on Tuesdays and Thursdays at 6 p.m. It's perfect for stargazers. The show provides excellent astronomical instruction and entertainment for no charge. That's right, it is free on Tuesdays and Thursdays at 6 p.m. The planetarium features a 30-foot diameter dome, a new OmniStar digital planetarium projector. During the shows, you can enjoy sky tours using the projector and PowerPoint presentations covering a wide range of astronomical topics. For more information, please visit jjc.edu/planetarium. And for you educators out there, they are open for field trip bookings. So go to jjc.edu/planetarium.
Welcome to the Lions Club. Being a lion means knowing that kindness matters. We believe in changing the world by serving the needs of our local communities. More than 1.4 million lions around the world are responding to local and global challenges with kindness and care. Come volunteer with us. Your Lions journey starts here. The Crest Hill Lions Club invites you to reach out to your local Lions Club to learn about how you can be a part of a community and bringing passionate, kind-hearted people together to serve local needs. They build relationships that lead to opportunities. In short, when lions serve, life improves, and the community grows. Grow with us. The Crest Hill Lions Club would also like to thank our sponsors who help with our yearly events, such as the car show and picnic at St. Joe's Park, and those who attend and support our Easter egg hunts, Shanahan Bingo, and many more events. The Crest Hill Lions Club meets the first and third Thursdays at 6:30 p.m. For more information on being a lion, go to lionsclub.org to start your journey today. That's lionsclub.org.
Are you ready to make your next move in real estate? Look no further than Exit Real Estate Specialists, your innovative leader in the industry. At Exit, we're not just about transactions. We're about building relationships and fulfilling dreams. Step into a community of empathetic, well-trained professionals dedicated to your success. Our Exit Real Estate professionals are more than just agents. They're your trusted advisors and allies in the journey of buying, selling, or investing in real estate. Whether you're selling your home or searching for your next investment, trust Exit to provide an excellent experience from start to finish. Our commitment to putting people first means you receive personalized attention and support, ensuring your real estate goals are met with success. Call us today at 815-823-5478 or visit exitrealestatespecialist.com to learn more. Exit Real Estate Specialists, exceeding your expectations every step of the way.
It's Get Real with Eddie, where everyone deserves the opportunity of home.
All right, 300 Theodore Street in Crest Hill is up for sale. It's a 2-bedroom, 1-bath with a full basement with a very nice large 3-car garage that features heat, hot and cold water, and electric. So definitely want to check that out. This 2-bedroom, 1-bath has hand-stained wood cabinets in the kitchen along with hardwood floors, and is just a wonderful little house in Crest Hill. 300 Theodore Street, Crest Hill, Illinois. Check it out online. Current price is $260 on that unit, so definitely want to check that out. All right,
Is that basement finished?
no, that's an unfinished basement on
Okay.
that one.
All right.
So, mortgage forecasters 2025 throwing out numbers as always.
Here we go.
So
The big forecasts, which we will be doing soon.
well, we're not doing forecasting. We're going to be doing
Numbers.
the number show, which is talking about all the numbers from last year.
Yes. Well, we usually do our own little.
And then you're supposed to keep it.
I
and
do.
then-
It's in my keep.
and you have last year's
I'm
numbers?
pretty sure I do.
All right.
I put them down.
Okay. Because you always seem to not be able to find them when you're wrong.
Oh no, I.
You like how
Cute.
I slipped that in
Cute.
there really fast.
I see. I always find them because I'm right.
Nice. So, looking at this year, will mortgage rates come down? Lawrence Yuen, chief economist at the National Association of Realtors, says, are we going back to 4%? Per forecast, unfortunately, we will not. It's more likely that we'll go back to 6.
I'd be so happy if we got to 6.
When I started real estate, rates were at 9.5. And they ticked down to 8 and everybody was happy. Then they went to 7, everybody's happy. So, I mean, these rates are not that bad.
No. I remember doing a video telling everybody they're down to 3. This is earth-shattering. It hasn't been this way since the 1940s, blah, blah, blah. Well, that was the point. That it was very unusual.
Yes.
So don't expect it to happen again.
No, it's not going to get down to 4. And if you're waiting for it to get down to 4, and you're going to keep renting and renting and renting, you're throwing money away.
Yeah.
Buy the house, rent the rate. Get the house now. Start building equity. If rates do come down, refinance. If rates don't come down, you still look like the expert
you're a
because
rock star.
You
Yeah.
bought the house.
Yeah. You're getting the equity.
Buy the house. All right. So the mortgage rates for Fannie Mae.
Okay, and these are mortgage rates for the average for the year or the lowest for the year? What is the actual projection?
This is the average, what they're predicting for each quarter.
Forecasting rates could settle in the mid to low sixes by the end of the year.
So
the end of the year. Okay.
So first quarter, Fannie thinks we're going to be at 6.6. Second quarter, 6.4, 6.3, and then 6.2 by quarter 4. Mortgage Bankers Association also at 6.6 for first quarter, 6.5 for the second quarter, 6.4 for third, and 6.4 for fourth. And Wells Fargo, because I've seen these numbers before, and I think we've talked these numbers before.
Yeah.
6.5 for first quarter, 6.45 for the second quarter, 6.25 for the third quarter, and then they tick back up to 6.3. So the later the year, the lower we're going to go. So they're not...
Which they've been saying. They've been saying that, though. This is not news.
It's going to come down to what the Fed really does at the next meeting.
Yeah.
Does the Fed hold strong because they're worried about inflation, or do they cut the rate because they're worried about recession?
Yeah. And it's just going to depend on what the world looks like at the time.
Yes. I mean, and I think they're going to hold strong. I don't think you're going to see a rate cut at the next Fed meeting.
Yeah. There's too much going on in the world.
So I think you're going to see the aspects of all this regulatory stuff that's been slowly, not slowly, but moving quick and getting taken out of position. That's going to come in, and they're going to wait and see how that plays out. So they're not going to be rushing to cut rates.
Banks don't like change. They like to sit and wait.
So yeah, with that being said, you're in a good aspect of where the experts are at. Flipping the script before we head out,
yes.
I do want to touch on the forbearance side of the mortgage equation.
Okay.
Because there's been a lot of talk about what it is and where it is and all this other stuff. So first off, what is forbearance? So Bankrate explains mortgage forbearance is an option that allows borrowers to pause or lower their mortgage payments while dealing with a short-term crisis, such as job loss, illness, or other financial setback. When you can't afford to pay your mortgage, forbearance gives you a chance to sort out your finances and get back on track.
Things happen. Life happens.
Mortgage forbearance is what was used primarily during COVID.
Yes. It saved people's homes.
Saved a lot. All right? So, mortgage forbearance is what should have been used during the Great Recession.
Yes. And banks learned their lesson with that.
They did.
Because they ate it.
So,
yeah.
According to Marina Walsh, VP of Industrial Analytics at Mortgage Bankers Association, MBA, the overall mortgage forbearance rate increased 3 basis points in November and has now risen for 6 consecutive months. All right, so we're seeing forbearance tick up, but forbearance, we're back at an all-time low. Yes, you're seeing forbearance, you're seeing these things tick up. November of 2024, percentage of mortgage loans in forbearance by month was 0.5. 0.5.
Yeah. Yeah, not a huge number.
We have been under 1% since April of 2022. The mortgage market is extremely stable, and I do not see anything major going on. Is it something to watch? Yes. Is it something coming tomorrow?
Well, they say
No.
46% of borrowers and forbearance today cite natural disasters as the reason for their financial struggles. Well, you figure all the big hurricanes
Yep.
and now the wildfires,
Yep.
people are losing jobs and
Yep.
livelihoods and
Yep.
homes.
Yep. Did I say yep?
Did you say yep?
I think I said yep.
Okay. So that explains a good portion of that uptick.
But it's still only 0.5% of the market.
Right.
So
Very little.
very little when it comes to the number of situations. So just keep that in mind. Don't let the clickbait take over and freak you out when you start hearing forbearance is up, mortgage delinquencies are up. Well, no, yes they are, but they're not because of these issues.
Right. It's not because of it's natural disasters, not financial. Does that make sense?
And here's the thing. Those are options you have to implement on your mortgage within your contract with it. You call them up. Your house burnt down. Are you going to keep paying a full mortgage payment on your house when it just burnt down?
Yeah, and you've got to find someplace else to live.
Yeah, you keep there's a payment that needs to be made, yes. All right? But there's other factors that you need to come in and play and address. And it's such a complex.
Banks learned their lesson. They want to work with homeowners. Homeowners don't want to lose their homes. They don't want to lose their credit. They don't want to lose, but things happen. Life happens.
I agree. I think that is a true statement. So, all right, that wraps it up with Get Real with Eddie. Don't forget, check us out online. Did I tell you I rebuilt the website again?
No.
I rebuilt the website.
Again?
It looks awesome. Not only can you go on and watch us on the website for the YouTube channel, but you can also now get our podcasts all from your favorite podcast players, Spotify, Apple. It's all there. You can turn around.
Made it the big time.
We are big time now.
We are big time.
I'm telling you. So check it all out. GetRealWithEddie.com, talking about your largest investment 24 hours a day, 7 days a week. GetRealWithEddie.com, talking about your home.
Thanks for listening. Eddie Ruettiger is the designated managing broker and owner of Exit Real Estate Specialists, located at 2750 Caton Farm Road, Joliet. License number 481014247. For questions, call Eddie at 815-823-5478.